Hello, investors, and welcome back. Let's take a look at Roblox because I believe it's important to do a comparison of the video that I released yesterday that kind of got you prepared. For those of you that are new investors, I think it's good to kind of make predictions as to what you think is going to happen and then be sure to lock in profits and mitigate your risk. You do not want to play this year. This market is going to be a lot different, but there's some things that you could definitely prepare for in the future with these earnings calls. Learn some of these lessons now and just know going into earnings, nobody can really know what's going to happen with the share price. We're going to talk about it all in this video. Let's get straight to it. Be sure to subscribe to the channel so we can get that number up and turn on the notification bell. All right, I want to start off with the shareholder letter, and I'm going to go through this pretty quick. I've already went through this. I made some highlights, and I want to share with you what I thought was important for those of you that aren't going to be able to make that call tomorrow morning. And I would say make sure you go back and listen to the question and answer part, because this letter to the shareholders, they're pretty much going to read this off. It's typically what they do. I haven't been on one of these Roblox calls before, but typically they read this just like a script. And then the last 15-20 minutes of the call, the analysts ask questions. And I think that's a very important part, that a lot of people that don't get ahead of what's going to happen in the next earnings call miss out on that big part. So it's important to go through this. We had an incredible year. You can't see that in the immediate share price. And what the business leaders would tell you is you can't look at these companies quarter to quarter. You have to have a long-term outlook when you're looking to invest in one of these companies. Their mission to connect with 1 billion people, I think that's really important to know, because PayPal had this same kind of mission and they kind of threw it away, leading into guidance. And that's where there's been so much volatility in that play. But they decided to focus on 1/3 of their users who are generating the most revenue. So let's see if they stick to this. We believe this is possible. So they're still sticking to that, even coming out of COVID. Maintain trust in community, safety, and civil. Those are their key priorities. Obviously, the majority of their consumers are children, even though they're expanding that base. It's really important to understand where they have their focus. Now, their 3 key objectives: international markets, we know they're expanding, attracting users, and the older demographics. Not only are those children going to grow up, right? And you don't want to lose and have a rotation through that user base, but you want to attract people across the spectrum. And that's what they're doing. They're trying to expand that. Take a long view. So this is where they're saying don't look at this quarter to quarter. When you're looking at any investment, you want to buy early before they start growing, and then stay with that company if you know that they've got the leadership, they're meeting their thesis, and that's what this is. The quarterly earnings are a period of time that you're supposed to be checking in on a company to see that they're meeting those KPIs, those key performance indicators, and we'll talk about which ones they are, and specifically the 3 that they missed that caused the share price to go down. Now, after the leadership team talks at 8:30, does this come back up? Do they say something in that call that causes a surge in the price? I don't think so, and I'll tell you why. We're gonna talk about that. They are communicating to not only just as a private company, but public investors, research analysts, and they said that they want to continue to share key metrics publicly each month. So they have foregone quarterly guidance, and they want you to maintain as a value creation. They want you to focus on the long term. So last week, 4 incredible companies decided to bring their brands into Roblox. I kind of talked about a few of those in my last video. Milestones monetize. We want to know when they're going to start generating revenue as these brands. So they're like, we know that you want to know about that. This is where the analysts come in. They have a good way of shaping questions to kind of get a response from the leadership team. So brands, these were important brands too, right? If you watched my last video. So removing friction. So they want to remove friction so that way these brands can come in. In my last video, I talked about Chipotle, how they had that crash. So obviously, when brands are very specific about not being embarrassed and being on a platform that's respected. So these brands will be important for economic contributors, letting the market develop organically, and that's pretty much what they've done, right? And they're focused on users, engagement, and bookings. So for the past 3 quarters, and we'll actually look at this as a visual. I'm going to run you through the graphics so we can skip past that part, but let's look at the trend, right? Everything's growing year over year, but the amount of growth is slowing, and that's what you want to pay attention to. And I think they've been very transparent, and I'm going to show you what I mean in just a minute. So users, engagement hours, payers, and bookings. All of these would be their key performance indicators. This is the way that you gauge how the company is growing and what's going to happen with the share price. So growth rates have declined as we are comparing in some cases to quarters last year in which certain key metrics doubled or even nearly tripled. So there was this super high, just hyper growth that happened, and we'll take a look at that in just a minute. So what is a normalized long-term growth rate for Roblox? So what year do we have to go back to if last year wasn't a good comparison or the year previous to that? So they know that these are the questions that investors or analysts are probably asking, right? When do we get to a normal state of growth so that way you can gauge or check the thesis for the company? So the national expansion, they're increasing that age demographic that they're targeting, Asia, Europe, and Latin America. They talk about the bookings. This is where they're giving you a view of where they expect the bookings to improve. From my perspective, what they're saying is Q1 might suck. You might want to come back around for Q2 or Q3. And that's what, or Q3, Q4. So Q1 might not be as great. Q2 might not be as great. But Q3 or Q4, that might be when you want to come back into this play. I really think that these pandemic plays are starting to shape the same story. And that's why it's really important to pay attention to these earnings calls. I think leading up to March, we're going to have to retest one more time before you start to see slowed growth this year. Q3, Q4, remember that timing. And I would look at this only if it dips below their initial public offering price before it ran up. So I know this is going to sound crazy, but I would look at this in the $50 range or $45 range. And I know that might sound crazy, but if you sit back and you wait on this one, what's the hurt? Look what happened to Facebook. Look what happened to PayPal. We expect to continue to report net losses for the foreseeable future. I hope that we get some clarification there. So this isn't a time to not have some kind of goal as to now. They want you to be forward looking and they're going to continue to invest in the company. But when will we see profitability where they won't take those net losses even with all this growth? Now, the Roblox developer community earned $538.3 million in 2021. So for the entire year, $500 million went to this developer community that's building that infrastructure for them. So I mean, that's an incentive for people to get paid. I mean, where are all the jobs going? I mean, some people are making money doing things like this. So during 2021, over 1,900 experiences generated more than 1 million hours of engagement. So just really big numbers. December of 2021, 40% of the top 1,000 experiences were aged up. So they're meeting that goal of where they're trying to get a higher age demographic. The top 10 experiences accounted for 45% of the Robux. This is the money that they use on the platform, earned in December of 2021, down from 57%. So basically what this is saying is even though the number's down, this isn't necessarily a bad thing because there's more content creators creating content and it's not just the smaller percentage. So they're trying to get 1 billion on the platform, right? Out of 1 billion, well, obviously that's their goal. I think they have about 55 million. I would say 12 million are monthly payers. That's a pretty good percentage, and 89% of those continue to come back, so that's good. Platform expanded music brands education, 12 brand partnerships, 6 music events, and they've got this Roblox community fund, and this is where they might extend into educational services. I believe they got a $10 million grant, and it's a partnership with this PLTW, computer science, biomed science, engineering students, and they're supposed to launch it in the spring of 2022. So the PLTW is reinventing the classroom experience, and why not? So just interesting that they're looking for creative ways to get users on the platform, curriculum, educational experiences, the metaverse, right? So in 2021, we made 3 strategic acquisitions, and the big one that they really called out here was the Gilded for Roblox. So this is equivalent to a Discord, but you can see all of these stats trackers, and developers need tools, and this is exactly what this is helping them with. Now let's talk about what exactly they missed that caused this price to go down. And I want to show you some slides very quickly, and then we're going to go through the charts because I want to show you what happened with this price action and how you could play this trade in the future. Now, of course, this is all history. It's easy to talk about things that have already happened, but that's why I did a video before this, so that way you could see the different things that I was talking about, and we're going to review those in just a moment. So number of analysts. We had 11 analysts for December of 2021. Average estimate was 772. They were supposed to hit, or they actually hit 568 million. So this was a miss. You could see analyst expectations were higher, even though this was significant growth for the company. It didn't hit what they expected. So they wanted 149% growth. And you can see this has been slightly increased. The last time I looked at it, it was 20%, so we got 21% here. And you can see next quarter, they're only expecting 53% growth. Do they come lower than that? Do they hit 52, 51, so on and so forth? 196% growth for the entire year if they hit that overall target. So you can use Yahoo Finance. They also missed on hours. They reported 10.8 billion hours, and analysts were expecting 11.19 billion hours, and loss per share. So just quickly, I want to go through these supplemental materials also that they released. If we start off with revenue, you could see that it's very easy to understand that there has been a revenue uptrend that could make this very interesting. When does it start coming down though? And you could see the year-over-year growth percentage has been trending down for the last 3 quarters. So it reached a peak here in Q1 of 2021, and this is what's really got analysts, a little concerned. Plus, they missed the target. So we'll talk about this number in just a minute, but 568 was not what analysts were expecting, even though it was better year over year. So the next one that I want to look at is the cost of revenue. So you can see the cost of revenue is continuing to go up. Developer exchange fees, you can see those are trending down as far as year over year costs, but they are also increasing. So personnel costs, they're expanding their team. This is another indicator that they're growing. It looks like year over year growth is decreasing, so it's not costing them as much, but you can see overall those are a cost that continue to increase. Certain infrastructure, trust and safety increasing, starting to trend back up. I think that they're going to continue to put money in this area. It's very important for their brand, but ultimately another cost. Now bookings, analysts were hyper focused on this, and even though bookings were up, you could see that they have been flat for some time. Matter of fact, they decreased last quarter, and seasonally, this could be why the number was as high as it was, but you could see that year-over-year growth is trending downward. Free cash flows at 77 million, and you can see that it hasn't been this low since Q1 of 2020. Daily active users was also a miss. I believe analysts were expecting this to be 50 million, and it came in at 49.5. Now it is slowly trending up, and I believe as they're able to get a larger or older age demographic in their international expansion efforts, you could see this number trend back up, but it is one to watch also. Now, hours engaged was actually down. So does this lead me to believe that maybe in Q1 this goes down further? And you could see that it was up last quarter, but it went flat as far as overall year-over-year growth. So does this start to trend down for Q1? And average bookings was actually -10. So you could see Even though that was higher than last quarter, it has been 4%, -2%, and -10% as far as year-over-year growth. So what you'll notice in these earnings calls is the company front loads all the positives up front, and then you kind of have to dig a little bit to understand exactly, is this growing technically year over year? So let's take a look at the charts, and then we're going to shut this video down. If we look at the 5-minute chart, I believe that most accurately reflects the price action that's happening in a very small period of time. You could see that trend line that I put in here last time. It was on that trend line. I mean, if you followed this straight across, it was hitting that trend line. Now, you could play this one of two ways. You could play the run up that dip, the 67, 68 right here. You could see it came down here. Some people could have bought this in the low or in the mid 60s and then sold prior to earnings, because this is what you know, right? You don't know. You know that's a good line of support here, but you don't know what's going to happen in the earnings, even though it's possible. Risk mitigation says that you wait and watch if you're buying shares. Now, the run-up, I like the run-up for an options play. Same week, you could do that. It's risky. I never recommend that people play an option for the same week, so you want to push those option dates out a little bit just in case you get yourself in trouble. You can cost average down and still potentially get out of the play. But you can see here, I mean, it revisited and then was on an uptrend. Now, of course, it's going to start off in the morning and buy territory potentially. That's what the indicator is going to say, but I see it doing a little bit of coming up, but trending down, sort of like we've seen with Facebook, and leading into March. This could pose a better buying opportunity if you're patient with this play. Now, I could be completely wrong about all this, but if any of this was helpful at all, be sure to subscribe to the channel, give the video a big thumbs up, and leave me a comment below if you made it this far, and congratulate yourself for spending the time watching this video so you can sharpen your tools. I'll see you in the next video. Be sure to subscribe to the channel so we can get that number up and turn on the notification bell.